Yeah, hello, good day. My name is Prince Zemi Kasali. Today we'll be looking a little bit deeper into crypto, although this is still the basic of crypto trading. The topic for today is crypto traders versus crypto investors. How do you mean? What exactly do you mean? What are crypto traders? What are crypto investors? Now, I see people like, oh, I'm investing into crypto. Why some people say I'm a crypto trader? What's the difference? Well, the two are almost the same, but at least there is a basic difference. And the difference is just the time frame, mindset, and strategy. That's all. That means the time frame of your trade. Crypto trading is purely buying and selling of a coin or a token, while crypto investors are also investing into crypto. Simply means they are also buying crypto and they will have to sell it before their investment goes fine. So it is the same thing, but the time frame of their buying and selling makes a difference. Now, the mindset also makes a difference. What's the mindset of a crypto trader? What's the mindset of an investor? Investor is interested in getting it big and does not is not in a hurry. That is why I keep telling people, "Oh, I want to invest. What do I earn daily?" So that is not investment. Investment is strictly time based. Like you put in money to something, probably in a year, in 6 months, in a year. What am I getting back? It is not a daily thing. When it becomes a daily thing, it becomes trading. That means it is buying, selling, buying, selling. You're not investing. Anything investment is time conscious. So that's that. Then what else again? Your strategy. What's your strategy? Your strategy determines what you're doing. Are you buying or selling? So let's go into crypto trading. Okay. As a crypto trader, you need to also understand that you need what do we call it? Basically an exchanger. We call it exchange. That is EX. Sorry about that. Just a minute. Well, an exchange, popularly known as SEC, that means centralized exchange. So that is probably where you want to trade for most of the time as a crypto trader because it involves time frame. So you need to choose a good exchange, okay? And when you're choosing a good exchange, you could just browse through Google. Probably, let me just add one more. Then you say the top 10 exchanges or top 50 exchanges, top 50 crypto, okay? Crypto, just a minute. Crypto exchanges. Okay, exchanges. Then you can just put markets, coin market cap. Now, the reason is that coin market cap is one of the most strongest place of getting crypto informations. That is the number one place of getting crypto information. So as you can see, the first on the list is Binance. Then you have Bybit, you have Coinbase, you have Upbeat. Upbeat just came up. I didn't think it's around that side before now. Okay, then we have OKX, we have Bitgate, we have Mexi, we have Gate.io. Okay, we have KuCoin, we have Crypto.com. Okay, then we have BingX. Okay, we have X. We have HTX, which used to be Hubi. Okay, then we have uh, uh, Kraken, sorry. Then we have Binance US. Okay. Oh, this is not even Binance US. This is Binance TR. Wow. So Binance US is not in the top 15. So I think these are cool enough. Any of the 15 is okay to choose. Any of the 14, Binance TR should be based to a particular place. Okay. So Binance, to Kraken. So I think any of it is okay. So you have it. This is Bybit here. Let's see. Bybit. Okay. Then The next thing you need to understand about crypto traders is that their goal is to make profit from short-term price movements. That means the up and down of coins is what the major on to make their movement. That's what I'm saying. So, like you see here, the coin is around here. That is probably around 102 point something. Let's say 102.5 or around 102 points. Let's see. Oh, sorry. Okay. Just a minute. I didn't get it. But this should be around okay, let's say this is about 102. Let's just say it's at 102. This is 106, and this is 1 hour time frame. That simply means in the past 1, 2, 3, 4 hours, coin left around 102, 103 to 106. So that's short time profit. That difference in the coin within the past 4 hours is all a crypto trader wants to invest in. And it doesn't have to even be on an hour base. It could be on a 15 minutes time base. It could be on a 5 minutes time frame. It could be anything. So as you can see, from here to here, the difference between these is what a crypto trader wants to even take advantage on. And we have different strategy of trading. Even some do not want that long term. They just want to take advantage in between these three and this tree on the 15 minutes time frame. So that's exactly what they are looking for. Wow. Okay. I saw this as a miss. Okay. When there is, this is a form of signal. When there is this eye movement and there is a range, then we are expecting another movement. Okay. Okay. We learn all those things gradually as we get more conversant with crypto trading and we are choosing our strategies. So it's all about the crypto trading is about short time focus. Like you just want to focus on the short time. You might trade on minutes, you might trade on hours, you might even trade on a daily basis, you might trade on weekly basis. Those are still short time when it comes to crypto trading. So as you can see, these are the time frames here. This is seconds, minutes, this is 3 minutes, this is 5 minutes, this is 30 minutes, and we have 2 hours. Okay, we have 6 hours, we have 12 hours, we have 1 week time frame, and we have 1 month time frame. So most of the time, daily traders, time frames, shorter time frames are called traders. Okay. So what else do you need to know about traders? Okay, they buy and sell frequently because quickly when they buy in between these and sell in between to make their profit, they want to buy another one. So instead of me waiting for 2 years, a year to make 5,000, or let's say to just make $1,000. Just saying that. You can just decide to make about probably $10 per day, depending on your capital, for just 100 days instead of waiting for that long. So it's all about buying frequently, making little profit, but buying frequently. Determines how how much you'll be making in the actual sense. And this cannot be done without the use of basic things like technical analysis, especially when you're trading crypto, just like the one I just mentioned right now. There is a kind of there is a kind of signal that people look at, like when there is a trade. When there is a trade, you can see, for example, this is one kind of signal. Let's see, low, high, no, okay, like this. There is a strange big uptrend. There is, the uptrend continues. And when there's something like a range, where there's something like a range, there's probably going to be another uptrend, and that's it. Although it is not always 100%, there is nothing you do on technical analysis or fundamental analysis that is 100%. Because human behavior, somebody with huge amounts of money might just come in without looking at all these things that you're looking at, pump money in, and the coin rises. So that's it. But basically, these are strategies that works at least 80% of the time. So that's that. Then you might want to use indicators. These are indicators that you can use. We have our EMA, we have our um, MEDC, that is MACD, and we have a lot of them. We have a lot of what do we call it? Resistance, RSI. We have a lot of them. A lot of them. A lot of them. What did I do? What did I do? Okay. So we have a lot of them that you can make use of. Indicators, you need to be conversant with indicators, you need to be conversant with charts. That means the diagram. The diagram, you need to be conversant with it. Like something like this. You need to be conversant with the charts, you need to be conversant with indicators, patterns, then even the candlesticks. You know what it means when there is a full candlestick. What does it mean when you have something like this? And so on. You understand? So, as a daily trader, you need that. Then, what else do we need? You know, then another thing that a crypto trader rides on, that means takes advantage of, is the volatility. You understand volatility? That means the up and down of coins, the rate at which, the velocity at which coins are going up and down is what a crypto trader takes advantage of. Then you also need to monitor the market often, you know, constantly, to understand what trend the coin is. You know, we a crypto trader trade as a trade basically on what do we call it, volatility, on trends. So you need to monitor constantly to see what trend are we having, what's the volatility of coins recently, and so on. So what else does a crypto trader needs to focus on? Okay, timing. You know, focus on timing the market. You know that when it goes down, it's going up. There's going to be, in the next 2 3 hours, there's probably going to be a tendency of coming up. If it goes this, if it meets up this resistance or this support, it's going to do this and so on. So it's not as difficult as it sounds. But for newbies, that means when you're hearing these things for the first time, it looks a little bit difficult. But what our advice is, start the way you want to start. Probably you might get some bots to trade for you at the beginning while you're learning as the bot is trading, or you might just start as a crypto investor or anything. So, what else? In a nutshell, you can also be either, your strategy can either be a daily trader, a swing trader, or a scalper. Okay, so that means you want to scalp, means you just want to moving out, 15 minutes to 5 minutes to 15 minutes time frame, in and out. Daily trader means you want to take your time to analyze the market, because at least you have the day. So a day can be 2 days trade, can be 3 days trade, but at least you're watching the 24 hours time frame. So it makes more sense. Okay. In a nutshell, the way it goes is, for example, you're buying Bitcoin, and when it goes 2% in your favor, then you jump out. That means you sell. You sell. That's all. Then you look for it probably when it goes down again. Then you rebuy when or you rebuy again to make another 2% to come out. So by the time you're making 2% 5 times daily, that is 10%. Then you probably want to, like, depending on your strategy, how many wins do I want to make per day? You've made 10% per day. That's cool. Whatever the market does, leave it. Come back another day, choose again. It depends on strategy and discipline. So, we've really said a lot about crypto trading. So, let's move into crypto investors. Okay. To grow it over the long term, that means when you are an investor, purely investor simply means putting money and, taking a little time to get that money. And the focus of an investor is, number one, you don't have the time to trade often and often. Then number two is to take your time and get the big win. Because the truth is, as we're trading, 1%, it goes down, you take 1% again, it goes down, you take 1% again, it goes down, you take 1% again. It is going gradually to the top, and probably you started here. All this 1% is good, but as an investor, you might probably get it big. You understand? So, an investor does not have the time to, jump in and out, learn too much of, analysis. Excuse me. learn too much of analysis. All they will just want to do is buy a coin when they feel it is safe to buy. That means when they feel that there's still going to be a serious uptrend. So they buy it, they hold, and sell later. So it's a long time focus, you know. It might take months, it might take years, depending on you, you know. A lot of people had, you know, forgotten their coins, and you know, it makes them very wealthy. You know, somebody who purchased probably Bitcoin those days, it's probably less than $100, and purchases even just one Bitcoin, and forgot about it, and probably later was lucky enough to see where the coin is, and probably luckily he was able to get in touch with it, even if it is just one. Remember, Bitcoin now is 107,000. So if you purchase it $1 those days and you're now selling it at $107,000, what does that mean? It means wealth. So talk less of you having about 5 or 10 of it those days. So that's investor. That's the way investor thinks. It thinks the long term. He forgets about it, buy so many different coins, forget about it, and probably come back in 6 months, in 1 year, in 5 years, in 10 years, and you know, check it out, and you know, you're wealthy. So that's the goal of an investor. So the major thing is to buy and hold. So regardless of all these short-time movements, he buys and hold. So and a good investor does not need technical analysis that much, although little technical analysis of, oh, when is coin always having their retracement. That means there's always this 4 year cycle of coins whereby after 4 years you see all coins going very deep, very shallow, and after that they pick up and you know they make waves. So that is also there. So, but apart from that, all you need is fundamental analysis, such like you know somebody telling you about the coin, somebody telling you about the coin, somebody saying, oh, this is a project to buy, probably an influencer that you trust, or probably you just feel like there is a lot of publicity on a particular coin and you buy, you hold for it, especially new coins, or probably you realize that the owner or the CEO behind that coin or token is a great one. So there are a lot of things, but basically, most of these are based on fundamental analysis, like use cases also, like the team behind, that means the CEO, the company itself, then the project value. What's the value around the coin? What's the noise around the coin? Who are the influencers? Who are the marketers? So those are things that makes you buy a coin and hold. And let's see what happens. Okay, so you're less concerned with the daily price swinging. That means up and down. You're less concerned. You don't even need to open it to check it because you are less concerned. You don't want to sell prematurely. You don't want noise to get you distracted. So you just buy and hold. Then less concerned with daily prices swing. Yes, we've talked about that. Okay, believe in future potential of the asset. That means you believe that this coin, you know, is going to be on Binance, it's going to be on Bybit, it's going to be on this and that. And probably you've purchased it even before it's had the hope of being on anything at all. So those are the kind of coins you want to buy based on fundamental analysis and so on. So you believe in the future potential of the assets, then makes fewer but larger and more strategic moves. So with this, you don't need much, you know, than to just obey your instincts. So that's it. So you can imagine you bought Ethereum and hold it for 5 years. As of in those days, you purchase Ethereum and you hold it for 5 years. You know what Ethereum is? At least more than $1,000. And probably you must have purchased it those days for less than $50. So that's that. That's that. So that's the major difference between a crypto trader and a crypto investor. Now, I understand that you're new in this. Probably you want to start trading right away. As a trader, you're looking for a way to trade. There is a robot I know which is called Sarai. It can help you trade without all these analysis. But gradually, as you're trading with it, you're getting conversant with the terms and terminology, and you can also be able to manipulate the robot to your taste. So that's that. Then another thing is you might also want to invest in forex. That means you want to trade forex, sorry, not invest. You're trading forex. So assuming you want to trade forex and you're looking for a way to do that, there is also an awesome bot called Tradevacity, and this bot is all very, very awesome for trading futures. You know, you have clone traders, whereby, I mean, you can clone traders. That means you can just copy a master and the person trades on your behalf. You don't have to worry. All you just need to do is to set your stop loss and take profit and so on. Your risk management, in short, there is a general risk management which you can just take care of, so that the system doesn't burn your full money. But from experience, we haven't seen anything like burning of your capital. You lose some trades, you win some trade, but totally in a day, most of the traders there would always end up in profits. So that's all about the difference between trading and also investing in crypto. So for more information on Sarai, which is used for trading crypto, and also this awesome bot called Tradevacity, used for trading forex, please check the description below and join the WhatsApp group um, to any one of your interest or both, to see which one will be of your interest, or probably you might just invest in the two. Sorry, you can just be part of the two because you're not investing, you're trading. Okay, that being said, you can please subscribe to this YouTube channel for more updates on crypto trading, forex trading, crypto related projects, and even general empowerment projects. Thank you. God bless you. Bye.